Good morning. Today is Friday, the last trading day of this week, and this week also a final week of trading for July, for the month of July. So we should anticipate a power up tree, right? Remember in the ICT concept, the power up tree for a candle is open, close, high, and low. So that's an idea right there. We should anticipate that pattern. And I believe that the action yesterday, the action price yesterday, it fit into there, right? It's the high of the month, and then when it close, it will go down and close. So that this retracement is fit into that pattern right there. Yeah, look at a monthly candle, you see that. I mean, a little bit hard to see now, but as you see that there, high, and then it's close right there. So it should be a good retracement right there. We should be short right there if we pay attention to the pattern. So yesterday we take a short position, and that would be great right there. All right, it gets started. The bell just ran. And also, you remember yesterday we do an update review. We project that it's gonna go up and retest go down. However, one thing we see that it not take our liquidity from this guy. So basically, it make a high low right there, but it did retest this. It swing high and it's become a bullish breaker. It did test out a bullish breaker. And there are fair value gap in this bullish breaker right there. So it did retest this area. Let's see how the market saw it today. You see, that is the area of interest there also. You see, that's the fair value gap right there. Bullish breaker, fair value gap. Actually, a huge fair value gap down here also. Retest error. And today, let's see. Basically, the pullback right here, we anticipate right here, but it go all the way to maybe this one, right? It's a bearish breaker here, so it's anticipated here. Let's say it break through here, or it's just gonna be retracement and then continue the downtrend. Okay, let's see how the market plays out. And we observe that the London section right here, so it check out the high of London section. However, you can see that the low yesterday it not taken, so it basically make a high low right there. So it's not gonna be a reversal. In order to have a reversal, I think you need to take a buy side liquidity because it make a reversal, a real reversal. Right now it should look like in a reversal is a retracement, and then it will come back. Maybe if retest it again, this error again, or this error again, then you can thinking about reversal. Otherwise, we still short term and downtrend right now. But you see, it did visit this error. Fair value gap. Let's see. So right here we have the open at 9 and open at 9:30. They are closed together, so it may indicate to us something that it's gonna make a big move, consolidate, and then it's gonna make big move. This is 1 minute time frame that we're looking at right now. Oh yeah, one more thing I want to show real quick is that, so you remember on Wednesday, right? On Wednesday we anticipate basically Tuesday and Wednesday is the low of the week, and we anticipate that that's going to be the low of the week. But actually what happened on Thursday, it invalid that, so it's not be the case. Then the second scenario for it is, so Thursday is a reversal day, reverse from Thursday and Monday right there. We take a note right there, observation, right? So now we see that Thursday is a reversal day, which is from uptrend start on Monday, Tuesday, and Wednesday. So at first we thought that, you know, Monday or Wednesday low is the week low, so you're gonna, but this model was invalid from the action, from the liquidity run yesterday on Thursday. And the second day players to apply, because yesterday is the first huge day moved out, and we believe that it may be another day out, so we try to play that strategy. And one thing we see that the skew is jumped 4 points on the selling day yesterday. It's very weird, very strange. Normally you will see the skew drop when we will sell, right? It only jump when people buying, so they buying. But basically skew is the insurance people buy for their long position. Basically they buy a put to protect their long position. Oh, okay. I can see that maybe yesterday they saw the price action to the downside too big, and then they panicked to going in to buy lots of, you know, insurance to skew their long positions right there. They actually don't buy anything yesterday, they just buy insurance. So that may be the reason right there. So maybe the market maker, right, they bought the so-called insurance, right? Because they are panicked due to the sudden, you know, selling yesterday, right? So they buy insurance. And they did not buy yesterday. They just buy insurance only, right? They didn't buy anything yesterday, right? Buy anything. So that's maybe the reason the reason behind why the skew is jumped 4 points right there. So people just, you know, buy insurance, not buy insurance. Normally they buy the stock, right, and then they buy the insurance on the same day. So that's the reason why when you see the stock, the index go up and on that day, and then you also see the skews go up because they buy at the same time. When they buy the stock, they buy insurance. So yesterday you see the price drop huge. That means they buy the extra insurance. You can see that they buy the add more. Right? They already buy insurance, right? They buy extra insurance. That would be make more sense, right? It's basically when they buy 100 share of stock, then they buy, one put contract to protect the position. But yesterday they don't buy anything. They just buy extra insurance, extra put contract. That's the reason why the school jump. So what do we see from this? Well, we can see the value gap right there, and retest this with this order block right here. Wow. Well, we see right here the buy sell liquidity taken. So if you want to engage short, then that's for you. However, another scenario is that the market structure shape is willing to go up, then this is just a temporary pullback. It's not a reversal. But let's see, you see the auto block right there. If you want, we can go short them or what. Short now, got the auto block right here, right? Further up. At the same time, we see that it did take out the buy sell liquidity here. The sell sell liquidity here. Let's look at the so basically we are still in the big swing right here, right? The range right here. So basically it's still internal liquidity seeking. It's not seeking any external liquidity for now. And let's see the retracement here. It makes sense to retracement. Let's do the retracement right here. Yeah, so it's retrace more than 50%. Then you may not want to engage in shorting. In shorting, you want it to the pullback get less than 50%, and boom, you can expect that. So let's see, let's adjust our anticipate. Yesterday we start right there, right? But actually we have to be around here 50%, right? That's the perfect scenario for to go short. That's the perfect scenario to go short right there. Retracement 50%. However, it not happen right now. It's above 50%. And let me see. Go back to 1 minute right here. You see, so that now another buy sell liquidity taken. Okay. Alright, let's look at the wow, the volume is 5-6 million right now. Let's close this for now. where is our 15-minute time frame? So what do we see from here? So by celebrates chicken is that market structure shift. It can go up. Let's see. It's gonna go up, then we need a order block and further gap for it to go up. Here we see that this order block, and then we see the further gap, but this order block is invalidate right here. How about this auto block right here? You see further gap, it's not a, it's implied further gap right there, right? Auto block, implied further gap, it's not clearly, and it retest. What the time right now is 9:46. Let's see. Look at the 1 hour time frame. You see this error is it added an interest right here, and it did revisit this error, right? Let's expand this. You see there's a joint between those two candles, so there's an error of interest there first. That's our fair value up right there. Let's see. And now go back to 1 minute time frame. Yeah, it's just around there. Yeah. Let's make it transparent a little bit so we can see it better. Okay, so this is doing this auto block. Retest, break that one. Yes, so let's see. Auto block at 9:42. And we look at the 5 minute time frame. Well, 5 minute time frame can give you some sign of the bullish signal. You see, it's huge order block, and this just check out the seller query for it to go up. So it's huge order block. This order block still, valid right there. This just a liquidity grab right there, essentially grab before it go up. So the 5 minute keep us a bullish signal right there, a bullish setup. However, we haven't seen any serious or high conviction or high probability setup right now. Wow. Ooh, look at that move. What a volatile today. Surprise. Friday, right? Friday, last Friday of the month, July. Very interesting. One thing I want to show real quick on a 15-minute time frame regarding to the liquidity run yesterday. You see, whenever you see the fair value gap on a 15-minute time frame within 10 and I think it's 10 right here, right? 9 to 11. Yeah, 9 to 11 fair value gap. You see fair value gap right there and retest the fair value gap around 12:45. You know that you need to go in and short them right there. So basically it's auto block, fair value gap, retest on 15 minute time frame, and that's a very high, properly set up right here. And you see that it take out the London section high, so that means is set up to short right there. And here's the clue for you right here also. You see this clue? It make a high low, not a low low right there. High low, that means is save this sell side liquidity later if you wrap them. So you could trap the pool or right there. The people, oh yeah, make a high low, go in and buy it. And they hold the position right there, and then they go down and wrap them. However, like yesterday, we did take a trade right exactly right here, and we exit right here. So basically, we play again a trend right there, but we bet on a retracement. It only have a retracement right there, and we just make our target and we get out. We don't want to get crushed right there. So just remember this setup for Thursday reversal right there, right? London section high taken out, buy side taken out, and make a lower high, right? You got that not much buy side liquidity there, so you have to go down. And then right here, you make a high low and then pull back. And if you look at 5 minute time frame, this error is the DR mid level right there, so perfect confluence right there for us. It'll be a nice short for right there. So what I want to point out from the liquidity run yesterday. So basically, when I say price action and liquidity run, to me it's the same. The algorithm seek liquidity or seek transaction. It maximizes transaction by seek liquidity. Well, another buy side liquidity taken. Okay, let's see So we can make high, 1, 2, 3. Is there anything interesting? Yeah, let's look at the 1 hour time frame. Again, you see, so we anticipate either swing low right here, so it's gonna be a what? It's gonna be a bearish breaker for us, so that may go all the way here, right? It makes sense now. Okay, what is the low of this one? 56.7. Exactly. Let's see if we can hit there. If we hit there, and that'll be a nice setup for short, right? Bearish breaker, fabulous gap, retest at what hour? 9 hour. Let's see. That means a huge pullback. That means we adjust our anticipation. We thought it. So is it a real pullback right here, or it's just reversal? But it doesn't look like reversal right here to you, right? Is it a reversal to you? No. Have you go down, at least take out this liquidity, right here, perfect. Or at least make an equal low, then you have a double bottom, so you can know that's gonna be reversal. But in this case, not. So I doubt it. But if it can be going and go long, no, we cannot go long right now. Let's see. That's anticipate right there. Let's see. You go long. What an idea to go long. How do you go long right here? You see any reason to go long? Right, you see the gap right here. It not even feel this gap. Oh yeah, this one keeps feel. Oh, you can see. Yeah, you can see the setup right here. Right, it's a bullish breaker, displacement failure gap, and then a retest one, retest twice. So that's your idea for long right there. Okay, so right here is your bullish breaker. Basically a swing high. You see, put a swing high and retracement, break that swing high, right? Fair gap right there, displacement, retest one, right? Retest twice and go, and retest twice, 3 times here. And it goes. So that's the theory for to go long right here. Why you want to go long right here? Because that's the setup. Let's see how it looks like. Yeah, perfect. Yeah, it also look good. It confluent with the 5-minute time frame. You can see that right here, right? It's swing high, bearish breaker, no, a bullish breaker, and retest, failure gap right there, retest. Wow, that's a nice setup. But what are our targets then? If we're not so sure, and the target is very conservative, you don't want to stay in the trade too long. you will end up what? You're not, you're not lose, right? You go in here, you move your stop loss. It's a decent, it's break even trade. Okay, you can go in along right here, right? Because it's auto block. You see auto block, and you see fair gap retest. Let's remove this for now. You see, is the fair gap retest right there. See that? Auto block, fair gap retest right there. We can go long. But it's too close to the bearish breaker, which is our high time frame BDRA. That's in ICT language right there. Basically, it's called supply. Supply or resistance range or error right there. You see, this is a bearish breaker. That's ICT term right there. But for other people or retails, it can be called supply or resistance. It used to be support, and now a resistance turn to resistance. Let's see. We'll anticipate move here and then go down. It retest, right? You see the setup, bearish breaker, fair gap, retest. If you want to short them, you don't want to see this setup. You don't want it to retrace more than 50% right here. Right, right now it's way. I think it's maybe 70% retracement right there. So that's invalid the short perspective right there. Let's see, you see retracement, you see rejection, let's see. That's level right there of 56.7 right there. Well, let's go back to 1 minute time frame. Okay, so I hit into this area, the barrier breaker, then it got reject right there. React 1, react 2, 3 times. Let's see, 4 times. Well, right here it could become your barrier breaker. No, a bullish breaker right here. You don't want it to go down below this. If you want to continue with that become your bullish breaker right there. You don't want it to break below this. So we are into 30 minutes of trading, and we haven't seen any really good setup for to engage. By the way, we are looking at a 1 minute time frame right here on a Thinkorswim platform, a trading application. Nowadays, people use trading view a lot. It got very popular. Well, if we see it cut down this order block, we're gonna anti-short. If we, right there. Wow, anti short right there. Okay, let's remove this for now. Okay, basically right now we see another sell side liquidity taken, and it run into a bearish breaker above. Let's see. So we have order block right here, right? See, create a favorable gap right there. No. We also have another order block right here, and the favorable gap, implied favorable gap, huge right there. 10:08, 10:07. That's the good time frame to go check your position. But are you going to take a long right here? Maybe not. Be right back. Right now the price action is very strange. I mean, very choppy. It's very hard to enter the trade right now. So just stay away for it for now. Maybe after 10:30, you can see something come up. Yep. So right here we have the first 1 hour candle form right there, and it's the second candle form right here. Start at 10. Yeah, so far it respect this bullish breaker. It did not close below it, so it's still valid right there, boss. So the uptrend momentum is still intact. Nothing really break right there for the uptrend. At the same time, you see this bearish order block, right? It's still valid also. So basically, it moved from here to here. That's the range we are in right now. If there anything we want it to be break out of this range, so we can have some real clean move, low resistance, liquidity run. Yeah, that's the range we see right now for us. Couple of minutes. Right. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So last 12 minutes is in this range. On the 15-minute time frame, we don't see any setup yet. We don't see any all block for the gap, bearish breaker for the gap. No, nothing. We see anything. I mean the same for 5-minute time frame. You see, 5-minute time frame. Do you see any favorable gap? No. We did turn on the indicator for favorable gap. No, we don't. We forgot to do that. Okay, I think I removed it earlier when I tried to do analysis. Let me go back to the default setup. It should be there. Okay, even though it's on, but we still don't see any. Oh yeah, the only favorable gap it have is the bearish favorable gap. That's it. The rest there's no favorable gap. That's mean no trade, no setup for us. Our engagement is that we will engage when we see a favorable gap. And then we trade back to that favorable gap. We see any order block and bearish breaker, then we can take an entry on the retest. Otherwise, no trade. Remember the condition first, right? The first one, you need to see the liquidity grab or taken, either buy side, sell side, and then we see the favorable gap, and then we see the retest to that favorable gap and order block or bearish breaker, then we get engaged. That's two conditions first right there. It will be better we have the confluence on, you know, at least two time frame, 1 minute and 5 minutes or 15 minutes. It would be great if you have a confluence of all three of them, 1, 5 and 15. Well, look like this is an order block, right? And this is a fair value gap and the retest. Yeah, you can see the setup right there for 15 minute time frame. Order block, huge displacement, fair value gap, retest. Wow, that can be a setup for it right there. The same idea, right? Bullish breaker, retest, and I'll go up. So we are in 246, first 46 minutes of the trading day today, and today is Friday, the last Friday of the month, July, and the last trading day of the month, July. Next week it will be in August, and surprisingly, we have July. Let's look at the monthly. Let's see. I mean, we have a huge run up, you see, from March, April, no, actually March, yeah, April, May, June, July, 5 months on the row. Have you seen that before? No. That's amazing, amazing run right there for the bull, but unmiserable for the bear. That means a lot of people are short. That's why you can go up and drop liquidity right there, because when they short, they're gonna put the stop limit is a buy order. That's called buy sell liquidity. That's the reason why lots of buy sell liquidity up there, and it's going and grab it, take liquidity, because the algorithm is programmed to maximize transaction, right? That's an auction theory right there. So basically we have right here, we still have this bearish breaker right here, right? You have to close above, but this order block right here is still valid. The bearish order block still valid, because this one haven't, you know, retested yet. So this order block still valid from last December. This order block. And we want this to stay above this one. You can see it's a bullish breaker. We want to stay above that in order to be continue bullish. That's right. Alright, I wanted to show something, nothing right now that interests us right now. So I want to show something that I saw the other day on a weekly table, on a, weekly time frame. Very beautiful trade. I wish I saw this before, but it's a lesson learned for us. So what did you see from here? You see it made a lower low, and it make a low low again. Okay, so that means it sweep all the sell side liquidity, right? And what is this week? October last year, and then you see that, and then it make a high low, and right here it's very critical right here, it make another high low right here. So you can see that means it tells you that the reversal is in place. And what do you see from here? It going from this, it make a high low, so it tells you that it's the shift in market structure is in place, it's gonna ready to go up. And how is it gonna go up? You're gonna pull back and retest. That's order block. See that? Right? If it pull back only right here, right? If we test this, you know, if we test this bullish breaker, then it can go up, but it cannot go up that far, right? Because it's just a shallow pullback. However, if I dip pullback into the order block, right? That's two kind of pullback, right? The pullback back to a breaker, or the pullback back to the order block. When you see the pullback back to the order block, very deep, and it forms so-called, you know, another term called double bottom right there. But for ICT concept, you know, you can call it a order block, feather gap, and then retest right there, and give you a powerful setup, and you know that this run gonna be very strong up leg right there, because it have all the hallmark of the what, a bull run right there, right? Sell side liquidity taken, a high low, and then right here I think ACC called intermediate term high right here, intermediate term high right there, and then make a high low, retest this, boom. That's beautiful right there. I wish we can, you know, identify this setup, but it's a lesson learned for us. And this a time is fractal, right? It can be any time frame if you did this. I think yesterday we did go long for the same setup right there. However, our target is very short. It's about our target right here. But in this case, it's go all the way to this swing high right there, buy side liquidity. Yeah, let's see what the setup we checked yesterday. We checked the trend Thursday, right? Yeah, similar to the setup that I just showed you on the weekly. This is the setup we checked yesterday, right? You see it make another lower low, which is the sell side liquidity taken, and then it make the intermediate term high. We take out this buy side, and then it go down, it retest that order block right there. You see, it retest them not one and twice, and we're going right here when it's right there. You see, and then I anticipate that it's gonna go take out this. It's not gonna reversal, right? But at least it's gonna take out the buy side liquidity that's out. We aim for $1, right? Even though later on this is just a temporary retracement at all. It's just a temporary retracement. It's not a reversal, but a temporary retracement, and then it go out again. But we catch that movement because we saw a very nice setup right there. That's on the 1 minute time frame. I think I did show that yesterday on the review. I just want to go go through one more time because it's beautiful setup. This is on 5-minute time frame. You can see that it's like a double bottom. The reason it signals is just a temporary because this leg down need to complete another leg down, the second leg down. That's what I mean. And go down real low. It doesn't make sense that it stopped right here. If we want to reverse, it may have to take our London low. And right here is our target, which is around the supply or resistance, or another confluence with the DR model, which is the DR mid level right there, midpoint, mid-range level, and perfect target for a long setup, quick and not easy trade right there for us. Okay, so far we don't see any significant movement right here. This order block is still valid, but we see that the sell side will also taken again. I mean the buy side will be taken again, and you see this order block, and you see the huge failure gap right here. Right, I want to retest the order block if I want to take a short right here. I want to see that. You see, that's the failure gap. Let me see. Wow, I think it's just a retracement. Wow, if you look at the 1 minute, no 1 hour time frame, it's play out exactly what I anticipate so far. Wow, now it break down this range, okay, into the downside. Then it tell you something that first it break down to the buy sell liquidity, it grab, got out to buy sell sell liquidity, and then it retest, boom, go. So this bullish breaker is invalidate now, so we have to look away to short them, right? And we are entering the critical time of entry right now, which is 10:30. Wow, what a move. Look at, go back to 1 hour time frame. You see, wow, the rejection right there, exactly into our anticipate range, which is a bearish breaker right there. Remember, bearish breaker is a down close candle on a swing low, and bullish breaker is a up close candle on a swing high. So that's the idea right there. Yep. There's two error right there, and right here we put right here, right? Annotate right there, and we will call this a bearish breaker. Annotate by a minus sign, and BP stand for bearish breaker. It's a huge retracement, 75% at least. So what you're gonna do? You treat this break structure. Wow. And this is another bullish breaker and not break it. You go short now, right? Short up, follow gap retest, short right here. Let's do it. See, and we're outside, guys. Outside going to be 9:30 open right there. Let's do a short. You see, check range short right here. Exactly 10:30, 31. Okay, short up. And what I was set up, auto block. I mean the time is about right. Fair value up, retest, and what the condition, buy side liquidity or just rated, not right. And also we see a sell side liquidity also rated. And the time 31 right there for us. We do the targets open. Yeah. So basically we're gonna reach how much we reach. Let's see. And our target right there, we don't want to go straight in the trade too long. We don't anticipate a big move on today or Friday, so let's see. And our stop loss gonna be where we go in here, right? Our stop loss gonna be right here. So 76. We enter right here, 76, 61, well, about 20 cents. Let's give it 20 cents. And we're gonna get more than 20 cents. I think auto block. Yeah, we get stop out right away, right there. Or at least we put stop out right here, see if we can stay in the trade. But as when after I take screenshot, take a trade, I feel like the sell side liquidity was taken. That doesn't look like a good setup to going and short. Anyway, we receive feedback from the market and we make improvement from there. Also, we just do testing today. We don't do any real trade today. But at least we learned the lesson. The feedback we receive. Alright, one more minute, we will wrap it up. We want to see how the 5-minute planner. Oh man, look at the 5 minutes. DR model. You don't see any fair value gap. The only fair value gap you see right here. That's it. So we should not engage at all. See, just chill out. Big move make yesterday already. Look at that. You don't see any fair value gap at all. Wow. So if we put our stop loss too tight right here, we got stop out. But if we put our stop loss right here where it's supposed to be, then we're still in the trade. And this setup still valid. Order block, favorable gap, retest. Wow. So we have to put the note. That's let's see. Yeah, so we have to put stop loss at order block high, not fair value gap high. So let's say we go in yeah, here's our note rate. We take stop loss at the order block high, not fair value high. Otherwise we get stop out easily. We short right here. Wow. If we entry late a little bit, it'll be better for us. Entry time 10:34, much better for us. We don't risk much at all. We entry right here. 31. $10.31. Better entry. $10.36. Right, 10:34. 3 minutes later. Just 3 minutes later. Yeah, yes, perfect entry right here. You risk almost what? Put your entry right here, 79, and how much you read? You risk, I mean, less than 10 cents. Less than 10 cents. Look at that. And how much you gain right now? 56. So 50 cents right there. 1 to 5 reward ratio right there. What is it? Yeah, we do have a fair value gap right here. We can turn it on. So. Turn on to see how it looks like. You see, that's the fair value gap right there. That's the fair value gap and retest right there. Alright, I think that's it for now. Talk to you guys later. Bye for now.